when you go to your larger time frame, when you are taking these trades, you can simply see, like you've got, here, let's do it like this. And let's color this one. Let's go a nice blue on this one. Something vivid and bright. Yeah, okay, like that. So you can simply see where the leg of your move is laddering, right? On larger time frames, and the larger time frames are going to lead to the larger bounces, right? So you have to keep that in mind when you're scalping. You ladder off there. You never actually back attack a leg here, which is kind of nice. And you ladder off here, and you just continue this ladder. So there may be positions and situations where you do take scalp trades. You get kind of liquidated out of one because you weren't paying attention to the larger trade. It's kind of that pull between being greedy and not being greedy enough, right? Like you can't just assume that 5-minute candles, just because you're scalping, that doesn't mean there's other trades going on, right? Like let's use this for an example. Yes, you were laddering against your target, but what happened here, right? You have an inverse level here. It's on a smaller time frame. You were continuously hitting this level here, or this, I guess would have started right here. Anyways, one of these two candles is fine. You could even just use this one. You have this ladder forming, and you did hit a larger inverse level. So it pulled back and it stabilized against the even larger. So let's talk about that for a second. This is a 15-minute level or a 5-minute level or whatever it is. It looks like a 15-minute level here. Find the actual valley. Yeah, it's right here. So this is a 15-minute level, right? So a 15-minute level is going to either be in a Pandora's box on the 15-minute, or it's going to stabilize against the hourly. If a 15-minute level breaks the hourly level, it's going to go and crush the move, right? Even the 4-hour candle here, this is another good indication that this can continue to ladder as long as it doesn't touch the leg of the move, just like it had the leg of the move here. This candle here didn't touch it. So it was a great position to be in, right? It was a great spot to sit there and say, oh, this is a beautiful spot to enter a swing trade. I made 1% there. And then you can short it here off this level. Just like we talked about, you can reshort this and say, oh, I can make another 2% on the way down, right? So this is those swing trades that we're talking about, these bigger levels that we should be looking at. Oh, it starts as a swing trade. Do we want to turn it into a scalp? If it continues to hold this ladder here, simply turn it into a scalp trade, exit your position, relong it, right? And then here we are now. And again, what do we have for levels here? We have this here, which ends up being a short. You know, as long as you can continue to hold this level, you could even get really greedy and go right here. The difference between 83.83 and 83.94. I don't think it's really worth it. I don't think for the few dollars it's worth it there. Especially when you knife catch it once and you're pulling back like that. It's not really worth it. So you simply have the re-entry here. Yeah, this is not worth it. This can't be worth it, 83.83. You simply have this here. This is the valley here that it breaks out of. Simply going to move up off that. And I think the rest is pretty self-explanatory here. You go up, up, and away, right? And then so fine, you have your targets up here that you hit right here. Kind of the greediest level. Again, greediest hold level on both sides, right? Short against that, open it with the intention to be in a swing trade and turn it into a scalp trade if the move is stabilizing. Like you can see it stabilizes here. You can see it stabilizes here. So you have to get out and turn this into a scalp. You can't. This is a perfect example of, okay, hey, look, we have an inverse level. The inverse level is not rejecting the move. It's holding a very high range. It's not rejecting the move. It's actually going to push right through it, right? It's just a matter of time here. Like this is another big clue right here, right? You have the ladder starts here, right? Oh, no, that's not what we want. You have the ladder starts right here. Let's take off that magnet tool. It's kind of messing us up right now. Good old magnet tool, back to the original days. You have the ladder here. It moves from there to here. So you are laddering up. So this move is telling you like, hey, look, you're going to break up and you're running out of time to get in. And then I'm assuming you have what looks like an origin right here. Or a larger inverse here. I'm going to say this is the inverse right here. Well, I haven't really dissected this move too much. So this is the inverse or the origin here. Again, another short target. Is it going to hold its range? Yes or no? Is it going to start laddering up after holding its range? Then it's going to invalidate the pullback, right? Have something like this right here, like this to this at first, that breaks. And you have this to this. Once this breaks, the move is probably gone if it continues to hold its range. It has a huge pullback there, absolutely massive. I'm not really sure what happened there, but anyways, we're just going to continue on. It breaks its trend and it's gone, right? So this would have been a great spot to. So where do you exit this swing trade? So you're here, the move is pulling back, it pulls back. Like, how do you capture the full amount here? This would have been probably pretty tricky. I probably would have only captured it. I would have looked at this move. I would have been in my. So this is a little different here. So you open your short here as a swing trade looking to possibly turn it into a scalp. That's exactly what happens. And you turn it into a scalp here. You hit your next target. You turn this into a swing trade. You don't actually come back and hit this level. So I wouldn't be exiting my trade, my position trade here. No, sorry, not position trade. I wouldn't be exiting my swing trade here until I broke this trend. Once this trend is formed, you're already starting to ladder down. You ladder from here to here to here to here to here. You're already laddering down. So you've created a trend, and until you break that trend, there's no point. So where do you take profits here? This is, the kind of the definition between swing and scalp. So what you could say is the leg of the move is right here. You're going to have some leg of a move right here. So the greediest spot to exit this short would be inside that leg somewhere. So it actually would have been on this dotted level that we have right now, which would be something inside of here. It's basically the same level. So you could have exited the short there and then relonged it, which is actually perfectly what happened. You just missed quite a big chunk here. Yeah, you missed quite a big chunk. You missed an additional 67 points there. So that's pretty big. However, that one would have been pretty hard to catch. That's a knife catch. I'm wondering if there's a trend there that showed us what that was. I have this here, right? Let's do a little bit of trend work here. See if there's a trend there that we were supposed to catch. So you'd be from here to here. Yeah, so this is a trend that we were supposed to catch. That's kind of what I was assuming. No trading view. I hope somebody fixes this software one day. It's not very fun. Here to here. And that would have been your knife catch on trend there. So there's a trend there that would have got you most of those points, at least half of them. So you could have caught trend, stabilized against trend, and that's fine. I probably wouldn't have done that. I probably would have just taken this level here. But hey, profits are profits. And this is, a great trading routine. So you guys can now see and understand the difference between scalping and the difference between swing trading and position trading and how we are supposed to be doing it. And scalping is no different, right? Like, we just taking our smart levels, taking trades against them, turning them into position trades when they need to be not position trades, turning them into, I keep making those mistakes here, taking scalp trades and turning them into swing trades when applicable. More often, though, a scalp trade is something that we are very aware of. We're saying, we're catching a knife. We're going to scalp this level. We're going to be in this trade for a very short period of time. We don't know if it's going to fail or go up. So that's the difference, right? Between a swing trade and a scalp is very unknown what it's going to do. It's going to catch a falling knife somewhere, and you're going to want to be out of it pretty quickly because it's going to have a very, very large bounce, right? Or you're going to be buying a trend break and it's going to have a quick move up. Those are more swing trades when you're breaking trend, but they can be scalp trades. You can enter a swing trade and turn it into a scalp trade. But there are some scalp trades you simply don't want to turn into swing trades, like catching a falling knife on a first test. So just going back to this first trade that we took, which was right here. Let's use a replayer tool for this one. Oops. Oh, I kind of missed the move and just let it kind of play out here. That's fine. We can just re-enter the trade right here. This is like the perfect example of, you have your level that was from back here that we identified. What was it? This one here? Come on. Or is it this here? I believe it was this here, right? There's some level back here that we identified. This? I think it was this. Yeah, it was this. I'm not sure. We'd have to go into the replay and look. But anyways, we catch a falling knife. have this rather large bounce off of this level, and it can be up to here. It can be right there. You have to make that decision, right? This is a very clear cut trade, right? You hit your level, you come up, you pull against an inverse. This could just continuously move down forever. This is why we don't want to turn scalps into swing trades, because this could just go here and just pull right back down. It could have a huge pull down. The only way it's going to start moving up is if it stabilizes off some levels in here, right? And so that's going to be a pretty dramatic result when it stabilizes there. So you don't want to turn scalps into swing trades. Rather, you want to let your scalps be your scalps. Let them pull back and stabilize like this, and then turn it into a swing trade, or a swing trade that looks like another scalp, right? Like you would enter this here and you'd say, oh, this looks perfect to enter here. We stabilize the move. We're going to at least pull up to one of the inverse levels here, which happens there. You have a pullback, and then you re-enter because you're still laddering here. There's the next ladder. And then you look for the next push up, and it happens there. And you hit your inverse level there, and you pull back. So then now you're going to enter your short again as a scalp that could possibly be a swing trade, or entering it as a swing trade, I should say. You ladder here. You're going to look for the next entry here. And you're gone, right? So quite straightforward here, what we're doing in this trade. Very, very straightforward. Not a lot of risk in doing this. As long as you know what you're doing and you know how to take these trades, there's not a lot of risk in these levels. Like there's just not. If you manage your bankroll properly, if you understand the difference of when you should be position trading, if you understand the difference of when you should be scalping, and you understand the difference of when you should be swing trading, the trick is more about, I don't want to call it a system. The trick is more about understanding why we trade the way we do. I guess you can call it a system. I don't know. I don't care. Call it whatever you want, I guess. I don't like that word, but that's just an egotistical thing for me. The way in which we trade is more important than sometimes the technicals, because the technicals are quite straightforward. Well, the technicals up to this point are quite straightforward. There's other stuff that I haven't taught anybody yet that's actually extremely advanced, but the technicals up to this point are very straightforward. And sometimes there's smarter traders who understand how to trade better and bankroll management properly, right? Like this is a different part of our trading. It's not how do we draw technicals and how do we react to them in a perfect world, right? Like though that's nice, we can react to our technicals in a perfect world and they'll give us the good trades. Our technicals will give us the spots to take these trades. But unless we know how and why we're taking them and where they're going, unless we know how to manage the trades, like trade management, unless we know how to do bankroll management and trade management, unless we know that, there's not really any point to being in these trades, right? Like there's just not a point to it. There's technical analysis and then there's procedural, which is the way in which we do things. So procedural analysis, this would be a part of it. This would be a part of, understanding procedures better and knowing what scalps are and how to scalp and the amounts we use and why we use the amounts that we are doing, where to take from the market more risk and smarter trades and get these bigger swings, right? It's all part of procedural analysis and procedural, the perfection of procedural analysis, right? So yeah, that's not a term anywhere, by the way. I made that up, procedural analysis, just like I've made up my other term, comparative analysis, which is butterfly effect, which is not, we're not talking about that today, but yeah, procedural analysis and technical analysis mixed together is a huge advantage for any trader, as you guys can see. So, all right, see you on the next one.